Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club. And while this might be a week to forget, it was a month to remember. And it was a rough week for the traders and markets overall, but it was a great month. And weeks like this are reminders to separate yourself from the recent daily volatility and look at the longer term trend. You might ask yourself how you do that, and I'll show you in the video after we get into our weekly recap of the markets. And we'll start with the S&P 500. As you can see, second week in a row, it was down, lost 2.45% on the week, trading at 3,811.15 with a chart analysis score plus 55. So overall, we're still in a long-term uptrend, but we are coming under some weakness, heading more to that sidelines mode. With that in mind, our key level to watch is going to be 3,789.54. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position. Dollar index, actually we'll switch this to a daily chart real quick, gave us a red weekly trade triangle this week at 90.11 that we've been waiting on for quite a while now, pushing the chart analysis score to negative 85, indicating that we are now in a long-term downtrend for the US dollar. On the weekly level, it did gain about 0.1% to finish relatively flat. Key level to watch would be 91.23. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for the US dollar. Take a look at the Dow Jones, currently down 1.78% on the week with a chart analysis score plus 55, indicating that we're still in a long-term uptrend, but it is coming under recent pressure with that weekly down after hitting a all-time high of 32,964 earlier in the week. Currently ended trading at 30,932.37. Key level to watch would be 30,911.37. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the Dow. Nasdaq, having the worst week of the three indexes, down 4.9% to 13,192.34, pushing that chart analysis score to negative 70, indicating we are now in a sidelines position for the Nasdaq with a new red weekly trade triangle showing up on the daily chart this week at 13,132.47. Key level to watch would be 14,175.12. A move above that level would give us a green weekly trade triangle, indicating a move back to a long position for the Nasdaq. Take a look at gold, continuing its downtrend with a chart analysis score negative 100, down 2.9% for the week, trading at 1,731.10. And our key level to watch would be 1,805. A move above that level would issue a green daily trade triangle, indicating a move to a sidelines position in the short-term time frame. Crude oil, bouncing back after losing some steam last week, up 4.4% on the week, trading at 61.68 with a chart analysis score plus 90, indicating that overall we're in a long-term uptrend for crude oil. Key level to watch would be 61.61. A move below that level would issue a red daily trade triangle, indicating a move back to a short-term sidelines position for crude oil. We'll wrap up the weekly recap with Bitcoin. Currently down on the day about 0.4%, but down on the week 17%, trading at 46,782.15 with a chart analysis score plus 55, indicating that we are getting close to a sidelines position for Bitcoin. Key level to watch would be 37,412.93. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for Bitcoin. We'll get out of here. We'll go back to our main indexes when I talked about earlier in the video, where you go and look at overall the longer term trend. And what I mean by that is we'll take our chart here and we'll change from a weekly to a monthly, and we'll just back this out for a year. Actually, we'll go 2, and you can see, even though we've had the recent weakness the last 2 weeks, the S&P 500 for the month of February finished up 2.6%, bouncing back from a monthly loss to start 2021. So overall, as bad as it seems this week, we're still trending long-term upwards and in the right direction. And you'll see this across all three indexes. So we'll move ahead to the US dollar. There's the Dow Jones, currently up 3.1% on the month of February, again bouncing back from a monthly loss in January of a little over 2%. So again, upward trending, longer term, everything's still a go for the market to move higher from here. And in fact, the Nasdaq, even as bad as the weekly loss was this week, it still kept a monthly gain for February, up about 0.9%, so just shy of 1%, and that's its fourth straight month of gains. As you can see, we had November, December, January, and now February in positive monthly territory. So again, sometimes it's better to take a seat back, look overall at the longer term trends, and kind of regain some sanity from a crazy week that was. With that, every success. Have a great weekend, and we'll be back next week with some market updates.